Daily trading recap for Wednesday, the 16th of February, 2022. Again, this is the biggest P&L day that I've had thus far in my trading career. And, I want to say that I'm super excited about it and just like on cloud nine, but it is that more drivenness of, hey, we're not done yet. We got plenty more to go. This is not resting in the middle. This is taking the small wins or the big small steps, one small step for trader, one giant leap for trader kind. As they come in days like this, but understanding that today was kind of a fluke a little bit for how I was able to take profits, but certainly still would have been proven right in my trading. It actually would have been a little bit more if I did not have a fat finger trade there. That'll get into it a little bit, but yeah, that's where I was at. Some other fundamentals on the day for me, or just fundamentals in the market, just for reference. NASDAQ $226 billion volume on the day. NYSE $299 billion volume on the day. OTC's $1.9 billion volume on the day as of 30 minutes after the close here. Still only had only trade today was the ES-MES spread trade on S&P 500. No other equity trades. I'll get into KSCP, had a nice little third day play there. Coming into today, but did not take that one. I'll get to that a little bit later. But yeah, going for after having the gap day up yesterday, I knew I really didn't want to be, and I was had other stuff going on yesterday morning, so it didn't allow me really be in front of the screens and babysit any trade that I had going on. But gap ups like that really scare me out, or think it's give me less conviction in a possible volatility play based on the opening price of where we sit in. Sure enough, yesterday was just another example of that it doesn't, for some reason, when we do get this gap, it's almost as if I put it in the perspective that when that gap comes after hours, it's almost if wherever you're sitting, you already know what your plan's going to be. It's just not this volatile finding your way throughout the market choppiness, because it's already kind of happened. You know, if you're long, what you're going to do after this big gap up. If you're short, you already know what you're going to do after this gap up. So there really isn't, the battle lines have already kind of been drawn when we do get the larger gap ups in the after hours. So the volatility aspect that I try to go after really isn't quite there. Just I kind of take that as a broad emotional perspective that way. But coming into today, really sideways price action, had a little bit of futures activity, but coming right back down and scaling down just a little bit under the previous close there coming into today. And sure enough, I was looking for 0.25% above, 0.25% below, going both long and short, the respective ES and then 10 MES short, or whichever I did, vice versa. But sure enough, as I'm setting up everything and getting ready to go to put in my limit orders after I am establishing a position right at the open there, looking for the converted values between SPY and ES, I fat fingered trying to get off 4454 for the limit order to the upside on the long, and I was screwing around fat fingered 4445. So that immediately got me out for wherever we were trading, and I didn't even calculate how much of a percent. I think it was like a $200 P&L on that one, so it must have been 4 points to the upside that it rose from the open immediately after that position. So that was just a mind screw in itself. I was like, wait, what is my calculations wrong? Like, how did I didn't even realize that I pushed, that it was the 4 and the 5 were off, but it was just that fat finger mistake that was continually, I was trying to reel into that realization, what was going on, and then also kind of interpret what the market was doing itself. In that, but still was setting the limit order. I'm like checking the limit order for the downside one. It's like, is that one way off? Like, no, everything's right. And sure enough, then I figured out eventually that I did fat finger it. And I was thinking about like, okay, well, I know I fat fingered it. Should I get long again, knowing that I'm still looking for this move and the probability is still there? No, okay, let's just stick with what it is for right now. We'll write it out and just see what ends up happening. But still very bearish coming into today. Playing around a lot. I don't know if I've talked about it insanely with these daily trading recaps, but looking heavily more into the gamma exposure aspect of the market as an indicator, more so than VIX, because VIX of how that's based. Again, I'm still diving deep into it of how VIX is actually established, but gamma exposure, GEX, is the kind of common terminology for that one, of establishing that, looking at that one today for what I found it, looking at both SPX calls and SPX puts, SPY puts, SPY calls, looking at like negative 30 billion as to what I calculated for each percentage move that's based on lots of assumptions about market makers and how they're actually holding contracts and what they're going to do based on price action. But that negative 30 billion mark that we had today in the morning, and again, that's based on CBOE data that I don't know if I thought I read somewhere that it's only updates once a day. It's a little bit delayed data, so it depends on when you get that, when that Excel file downloads for all those open interest and contracts to download. But whatever, regardless of the point, that's just what I'm establishing, starting a little gathering of data to expose myself to that. But of that number that I had of 30 plus billion, that is the number at which, for this exchange, of course, there's the futures aspect of it too, but through SPX, through SPY, $30 billion would be the price target that Gamma would have to be adjusted or sold into or bought into if price went down by 1%. So then they would have to then sell 30 billion more in contracts for the actual underlying in order to get the gamma back to zero, get their exposure or balance back to zero, is my current understanding of the insane, stupid research that I'm doing. It's just like trying to slap a textbook over my head with that. But that's my current understanding as of it now. And looking at it more, looking at the squeeze metrics data, I'm trying to see how they actually establish their numbers, because they haven't been able to quite align myself with those numbers. And I think those are more after the close as well, too, for squeeze metrics. But exploring a lot of that reality with Gamma more so than VIX as volatility, because, I kind of have that in the background for some of my data and just have it for funsies of like, oh, if VIX is above 20, then it's going to be volatile and different metrics like that. But I think this Gamma exposure can give me a little bit more refinement in what I'm looking for coming into the market day to say, okay, what do the battlefields look like today on the market? Are we going to be pretty flatline? Is it going to be a trend day today? Is the market going to be allowed to function as normal or just work however it wants to do? Or is there going to be a lot of players coming in to hedge their positions or play with the price action both to the upside and downside to protect themselves? So a lot of elements to that, and you can just freaking go insane doing that, trying to manufacture, just create all these algorithms and scientific ways of looking at the market and trading in the way that I'm trying to. But yeah, just trying to find any little type of edge that I can with this one. And sure enough, today would have been a repetition or matching in the data that I've been collecting of saying, hey, it's with another showcase of high certainty. There is a high percentage that from the open, you can have a very good chance of we get X percentage below the open price and X percentage above the open price within the same day. And it's just all about how much risk can you withstand if it does end up just dumping a percent below you, or vice versa, but still end up coming back green on the day or red on the day, vice versa. Where's a good day's reference of a day like this last week, Thursday, that it had I believe that was the CPI news that came out, dunks it before market open, and sure enough, it reclaims all the way back to that pre-market high, and then dunks all the way back down to red, just of how volatile days like that can be. And then today, too, we had FOMC minutes around 2:30ish Eastern time, which, yeah, factoring that in, I don't ever want to be biased or just kind of with the wind of what ends up happening with those minutes or with whatever news catalyst can come, planned news catalyst days like that with the Federal Reserve or with whatever that can affect the overall market like that. I don't want this plan to be based on that or allow myself to be thrown in the wind, kind of handcuffed to those news catalyst events that can do whatever they want to do, even knowing the news beforehand at times. Tom Sosnoff's great quote at that of, even if I told you the news beforehand, it's really unlikely that you could have an incredibly awesome, profitable trade off of that, especially for how the market has been in the past few years. So yeah, that was in essence all I had today. I want to go into, I'll just look at KSCP quick. Awesome little third day play. Second day holding up pretty nicely for the rest day, not too insane a volume that it was wearing itself out too soon or just kind of pre-ejaculating too much too quick. Looking at this daily perspective here, this recent little, I wonder if it's an IPO, but either way, it was interesting to see that on the small cap recaps today, TUI was actually playing this one as well, looking for the same thing. I wasn't focused on this one at all, had other objectives, obviously, with the SPY itself, putting my full focus on that. But KSCP certainly identified this one coming into today, and it'll be on the charts for a good little while as a representative of what could potentially happen with these types of tickers like this. I forget the float on this one as well. Yeah, I think it's 4-ish million floater on KSCP, but Tui was stopping himself out for just how inconsistent, choppy, breaking VWAP, kind of breaking these lows here. This candle especially, as it's dunking off of that little double top-ish range, but sure enough, it does eventually come through to produce some nice little price action for that morning session, post-morning session. Dunks back into lunchtime, and then sure enough reclaims in the afternoon, and then sells off back to VWAP before the close there. Interesting charts and interesting price action on that one for sure. That is really all I had. Again, nothing hard for me to convince me to climb out of this futures sector that I'm in as of right now in the equities market. Nothing popping up hard on the scanners. Nothing was popping up on the scanner, on the mover scanner that I have for like the first half hour of the market, which I found insane. Even Hook itself too. I'll just show quick. Hook. Overnight mover normally would like to be short after the initial perk here from that after hours move, looking at that as a playbook trade and playing in any pre-market cover or looking for continual downtrend in the into market open and the market day itself. But sure enough, this one just held sideways for a good portion of the day, but had this little squeezy perk and then failed, came right back down to that range. Interesting price action on all these. And yeah, as a lot of people will say, and a lot of perspectives are coming to this market, that it's just not, it ain't hot. It's not like 2020 hot, and that's for certain. So I think I am very incredibly grateful. I was even realizing that just before starting this video of, man, I'm getting so much more knowledge and exposure to things that I never really would have really looked at if I was still just so keen on the OTCs and small cap style of trades, but just broadening my horizons to the actual workings of the stock market and options expirations and what is gamma, what is delta, and all these just very different terms and labels and very key things to how the stock market works that I really just didn't really think about or wasn't necessarily had to be exposed to at the time, but certainly key valuable information to understand the fine workings of how this entire machine begins to run. And it's a crazy machine, that's for sure. That's all I got. I sincerely thank you guys for watching. We will catch you guys on the next one.